Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of LME 3-month nickel and zinc.
LME 3-month nickel. The mid-June, early August bearish shift pitchfork, which is highlighted in dark blue on my daily chart, had started to show the true bearish angle of attack of this market, especially as prices over the last 4 weeks moved down to test the lower time, currently at 18,200, as well as supports dating from 2019 and 2022 between 18,230 to 18,850. However, this pitchfork is right now being ripped by the forces from another pitchfork, a sister, if more recent, bearish shift pitchfork. The August-based bearish pitchfork, highlighted in bright green, shift pitchfork, highlighted in bright green on my daily chart, had since late August until last week also shown the bearish angle of attack, but only for the more recent action. It was when the upper tine of this bearish shift pitchfork, currently at 17,980, met the lower tine of the original mid-June to early August bearish shift pitchfork, which is currently above it, 18,200, that both pitchforks started to suffer. Let me make this quite clear. Right now, neither of these pitchforks are going to come away from this crossover, and neither is this market going to come away from this crossover without some serious injuries. Below the market we have support at 17,810 from the October 2019 high, and again between 16,610 and 17,095, which has the June 2021 low at 17,095 and the May 2021 low at 16,610 in it. I have a strong suspicion that some, if not all of these, may well be tested in not too distant future. Finally, I would once again urge you to keep in mind my words of 3 weeks ago when I spoke about the mid-June to early August bearish shift pitchfork, and I quote, "Until prices break out and below the lower tine, and properly with an absolute minimum of 2 consecutive closes below the tine, then this bearish shift pitchfork will run the angle attack of this market." End of quote. If the supports below are to be tested, then the lower tine has, I repeat, has to be broken and properly broken, and there may be collateral damage because of that. LME 3-month zinc. 2 weeks ago I started my commentary by stating the following, and I quote, "This market has exited one pattern, a bear channel dating from April to mid-June, into another pattern, a shallowly rising bull channel from mid-June to mid-August, exited that into a third pattern, a late May to mid-August bullish Andrews pitchfork. I've yet to see if this bullish Andrews pitchfork may morph into a bullish shift pitchfork, but right now I'm not too optimistic on any such new pattern running the angle of attack, especially after the good job the bullish Andrews pitchfork has done." End of quote. Well, no sooner had I said this when the bullish Andrews pitchfork did indeed morph into another pattern, into this late May, mid-August shallowy bullish, really to me, too shallowy bullish shift pitchfork, which I have highlighted on my daily chart in bright red. This is not a perfect pattern by any means, but it is still there with the market just below the middle time, currently at 24.75. However, in the bigger picture, the market still maintains this position within a very large May to August bearish shift pitchfork, a bearish one that is, at the moment. It's a little over the middle, we're actually a little over the middle time, currently at 22.85, which is highlighted in purple on my daily chart. I just wish to emphasize how this bearish shift pitchfork is now well over a year old, and it is still working in driving prices lower. But this should only be seen in the bigger picture context. I wish now to dwell a little longer on the somewhat contradictory nature of this market, perhaps seen as indecision, but on a bigger scale than just this daily chart. You see, in the last week of September, we had a weekly key reversal up that almost made it as high as the descending long-moving average, currently at 26.44. Yet the very next week, we had an immediate countering weekly key reversal down, the one that's led to the break of the bullish Andrews pitchfork and the morphing into the now shallowly bullish shift pitchfork. This, to me, has been indicative of some longer-term indecision in this market, much as the recent bullish shift pitchfork counters the longer-term 22 dating bearish shift pitchfork. That is why I'd like to point out another potential pattern in the making. The actions in October have already set up the market to make a possible monthly key reversal for October. Thus, if we have a close tonight either above 26.57 or below 24.34, then we'll be on. Anything in between and we'll have the lesser outside month. Well, right now we have seen the market back away from what last week looked like a monthly key reversal, down, if only just, into a lesser outside month pattern, but again only just. It's by $3. In the immediate term, I'd continue to keep an eye on the bunching together, flatlining medium moving average, currently at 24.46, the short medium moving average, currently 24.66, and the short moving average, currently 24.55, as well as the suggestion below at 23.97. These three moving averages are too close together for my liking and for, I believe, actually the health of this market.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.